Hello and welcome. My name is Melissa Galasso, and I'm super excited to be here today to talk about a new ASU issued by the FASB. ASU 2021-08 addresses a question that was brought up when Topic 606 became effective. When you think about this, a lot of times you update a particular standard, but sometimes the relationship between that and other standards is what gets called into question, which is exactly what we see here in this standard. So ASU 2021-08 is related to business combinations, and in particular, how do you account for contract assets and contract liabilities from contracts with customers? So when you think about this, typically we apply Topic 805, business combinations, which requires acquisition accounting. However, the question was, is acquisition accounting, which has a lot of fair value, appropriate if we've adopted Topic 606? And so there was different beliefs here, again, diversity in practice, regarding what was the appropriate recognition of these acquired contract assets and liabilities, and if how payment terms would affect subsequent revenue recognition by the acquirer. And so as a result, many people asked questions and wanted some additional guidance on how do we measure these contracts. Now, if you think about it, 606 is a performance obligation approach, right? With the timing of revenue, you recognize revenue over the estimated contract, right? So for some of these contract assets and contract liabilities, what are we going to do here? And so this update basically tells us that it's going to require that the acquirer, instead of using fair value under the acquisition method, will instead recognize and measure the contract assets and contract liabilities acquired in a business combination in accordance with Topic 606. So instead of using Topic 805, instead we're going to follow Topic 606. And so at the acquisition date, we should account for the related revenue guidance in accordance with Topic 606 as if the acquirer had originated the contracts. Now, if the entity being acquired currently follows GAAP, has applied Topic 606 correctly, has done the performance obligation approach, generally speaking, you would just measure the assets and liabilities how they were recognized and measured in the acquiree's financial statements. But that's not always the case. One, it could be that the acquiree, it doesn't follow GAAP. Maybe they're using a cash basis or tax basis of accounting. Or maybe they didn't actually apply Topic 606 correctly. So maybe we identified some errors or changes that would need to be made. And so in those circumstances, we would have to consider the terms of the contracts, look at the performance obligation, looking at the appropriate timing of revenue, and we would have to update this as we go through this and make sure that it's recorded appropriately at the acquisition date. So not so terrible there in terms of the process. But again, if it's a 606 already done correctly, not so bad. Not 606 right now. Having to convert to 606 can be a little bit more interesting. It's just basically like adopting 606 for the first time. So now the other question was scope here. This addresses simply the accounting for contract assets and contract liabilities from revenue contracts with customers. That can also apply to contract assets and contract liabilities from other areas like Topic 610-20, other gains and losses from derecognition of non-financial assets. However, it does not apply to the accounting for other assets or liabilities that come out of revenue contracts from customers. So if it's a contract asset or contract liability as defined in Topic 606, it's in scope even if it's not a 606 item like Topic 610. However, if it's in 606, but it's not a contract asset or contract liability, right? Refund liabilities, for example, customer-related intangible assets, contract-based intangible assets, those are not in the scope of the standard. In terms of the effective date, it is effective for public business entities for fiscal years being after December 15, 2022, including those interim periods. For everyone else, it's for fiscal years being after December 15, 2023, so a little bit of a time frame here in terms of implementation. However, as we go through this, early adoption is permitted. So this is going to be, the amendments here are going to be applied prospectively to business combinations occurring on or after the effective date. And so as you go through this, it would be retrospectively to any business combination that occurred in the year of the financial statements, and then prospectively going forward to any combinations on or after the date of initial adoption. All right, so again, very targeted, really focused only on those who are performing business combinations and acquisitions, but does answer a really important question and reduces diversity in practice. So I want to thank you guys so much for joining me, and I hope to see you on a future Nano Learning. Have a great day, guys. Bye-bye.